Hi, thanks so much for tuning in. You're watching BQ Prime. My name is Alex Matthew, and this is an earnings conversation. We're speaking to the management of Anand Rathi Private Wealth. Feroze Azeez, the Deputy Chief Executive Officer of the company, is joining in. Feroze, thanks so much for taking the time. Uncomplicated is your tagline, and seemingly uncomplicated are the results as well. 30% plus growth, both in revenue as well as a PAT for the quarter gone by, and you seem to be keeping the trajectory that you set last year. Can you break the numbers down for us, though? What was the primary driver in the quarter gone by?
Hello, Alex. So I think, like you said, uncomplicated is our tagline, and we really think that this business requires a lot of uncomplicated advice and distribution. So that's what's our aspiration. And thanks to say that our results are uncomplicated as well. And I think God has been a little extra kind when you look at giving advice. Or your distribution service. I think what's happening is after an inflection point in a business like ours, word of mouth really helps, because if you have 8,700 families, those 8,700 families would at least know 5 HNIs each. So you get this cascading impact. Once you build it brick by brick, when the foundation is built, the plinths are built far more quicker than what you envisaged it. That's why the new client addition is growing rapidly. So we've added about 1,300 HNI families in the last 1 year from June last year. And I think that rate at which we're acquiring is also going up. That's point one. Point two, I think since the period of the last quarter, which was March lows, we have this practice of telling the clients that when markets are low, you'll have to invest much before the markets are low. When you prepare a client to invest when the markets are going to be low, much before they actually correct, then they're prepared to cut the check. On the day when they correct, they don't have the courage. So they have to be mentally prepared and waiting for a correction all the time. So that's created a reasonable net flow last quarter. And that's resulted in revenues enhancements in trails as well. That's the item number 2. Item number 3, of course, we've added a reasonable number of RMs, more than 35 RMs over the last 1 year. Those are new plant and machinery erected, which have started delivering as well.
So if I'm not mistaken, 395 families just in the last quarter and 15 RMs on a net basis, Feroze, based on the release that you sent out. Given that your inflection point is now past, as you point out, and you're adding clients at a much faster pace than you have in the past, will you have to expand your RM network more substantially in this current financial year as well? What are the plans there?
Alex, see, what happens is it's not very difficult to expand the RM team. We also look at the probability of success of the RM. So you need to expand it in a calibrated pace such that the probabilities of success don't fall below 95, 97%. Because if you have an RM who doesn't succeed, that's not a very good news for us culturally. So I think whenever we think we're confident that you can have another 20 and there is enough leadership to support them and bring them up to a certain point, like a baby, that's what a leader does in our setup. When we know that there's bandwidth, then we hire RMs or internally promote them. It's not bottom up saying that I have 100 more RMs I can bring in and then grapple with leadership issues. So that's why, but having said which, I can definitely tell you where we stand. I think a lot of leadership has been built in the company and it's always a chain reaction. Somebody helps another and that leader helps another 3-4 people becoming an RM. I think leadership is prepared for the next 3-4 years. So RM expansion should not be constrained by leadership bandwidth. And that's what we've been preparing over the last 4-5 years. And I think we're just about 6 months away.
Okay, so, but could you also give me some perspective on numbers? I know that you will be wary of giving exact numbers, but if you can give us a sense of how it's expected to grow.
Yes, see, what I can actually more precisely give you numbers as well, because we internally train people. So 296 account managers who support RMs almost one-on-one. We have 308 RMs and 296 account managers. This is not clerical staff. These are really sharp brains from very, very good backgrounds of education who are being trained. So I know who are the next 50 set of RMs we have. So I think a 30 to 50 number RM expansion, I think is par for course.
Okay, in the current financial year, I'm assuming.
Yes.
Okay. Now, I was actually reading through the notes to accounts, and there was an interesting mention here, Freedom Wealth Solutions. This is a subsidiary of the holding company that was held for sale, and you have decided against that sale. Could you give me a little context here, and what is this business about?
No, see, we had a subsidiary which we had categorized as held for sale, and now we are reverting that decision because there are some other business opportunities which we have thought can be part of this subsidiary. And I re-establishing another subsidiary may not be so meaningful at a point in time. So we would rather retain it. There are several businesses from offshore offices to someday an asset management company. If it also, that's why this decision got revoked. And it's no more, it's a continuous business as a category now.
You mentioned someday an asset management company. What are the plans there?
Yes, Alex, you've got the right word. So that's, see, what happens is there is, when you're in the wealth management business, there are some proprietary ideas you would want to backward integrate on. Not like managing an equity mutual fund standalone, because there's such great people. We have 40 great asset management companies from which I can always choose out of 380 active funds. I can always choose the 14 using the technical tools we've developed over the last decade or so. But from certain proprietary ideas, if they can be housed in a tax efficient format in the form of a mutual fund, is worth considering. So I'll leave it there. Of course, that's not to make a Me Too product and make in-house products to get manufacturing income. But the idea is a little larger. When we get there, I'll definitely elaborate, Alex.
Any dialogue with the regulator so far?
Not as yet. Not as yet.
Fair point. Okay, so then we spoke at the start about the rate of growth, and you said God has been kind. But I think your shareholders will probably be also feeling that kindness stretched to them as well. The question that I have is, considering that you've beaten your own estimates or your own expectations of 25+% growth or 25% growth as a steady state, what are your expectations for this financial year, given what we know at this juncture?
Alex, as a DNA, we are in the business of creating an expectation with a client, for example. We always like to be not too aggressive just to get a client on board or even a shareholder on board. So 20 to 25% is our long-term guidance, and we very well know what we are in effect saying. See, 20-25% looks like not an outrageous number, but 10 years, I'm speaking of a PAT of 1,300 crores to 1,900 crores. That itself is a wide range. Sometimes what happens is on a lower base, you can grow at 30-35%, but a shareholder, if he looks at a long-term guidance and takes it seriously, and these 30-35% growths are generally because of the base effect, right? 200 crore, 205 crore of PAT is what we've guided for this year. And if God is kind, we should be able to at least marginally overachieve that.
So a couple of levers, I think. One is obviously your client addition and what they're bringing to the table, and also what the markets do in the interim, right? But could you tell us about, or give us a sense of the picture as to where those clients are coming from? 400 odd clients added, or families added in the first quarter?
You see, if you look at the ratio, 60% of these clients come from references. When a client finishes 5 to 7 years and we have delivered as per promise, not just on the return front, on the risk-adjusted return front, because return is something you only pay for, right? That's why it's called expected return, and it's not called return management. Risk is called risk management. So on both these vectors, if you have promised something and you deliver it for 5-7 years, there is a certain tendency to speak to friends. So 60% of our clients come from references. 40% come through events where we call them in a room and then tell them how we are different and why we think that we are a blue blood wealth management outfit.
Okay. No, I was actually trying to understand geographically as well, where these individuals are, or these families are coming from. Do you have color on that?
Yes, I can give you a basic color with some degree of tolerance. You have to take my numbers.
Sure. No
so yeah, I got your question wrong. Geographically, see, we have a largest presence quite a few years back itself from Bangalore and Mumbai. Delhi and Pune are the new emerging locations, which we were weak on 5 years back. Now we have one of the largest teams in Pune and Delhi. So these 4 cities generally cover about 60 to 70% of our acquisition, because that's where the business comes from. We have Kolkata, which is a location we started just about 4 or 5 years back. That's doing well. So if you have to give you a split, about 20% of the clients come from Bangalore, 22 to 25% from Mumbai, and 15 from Pune and Delhi, the rest of them get added. So the number of RMs, if there is, we try and have at least 0.6, 0.7 clients per RM per month. So more the number of RMs, more the acquisition from that location.
Fair point. I think we've covered quite a lot of bases, Feroze. Thank you so much for joining in, for speaking to BQ Prime. Always a pleasure.
How do you make the most of the India opportunity as an investor? For that answer, all roads lead to BKC in Mumbai on the 13th of July. 3 big money managers describe the size of this opportunity. 2 of the largest mutual fund CIOs then tell you about the mega trends that they're investing in. Will the current capex cycle be similar to the one between 2003 and 2008? We get that answer from Sanjeev Sharma of ABB in a conversation with veteran investor Madhusudan Kela. And then we rounded off with 2 of the most prominent investing names talking about how to make the large bets and make it really big. All of this and more at the Trident Hotel in BKC on the 13th of July. Catch the action live on BQ Prime.